Okay, good evening everyone. So welcome in and thanks for joining us today. So my name is Snehat. I am a part of the HarmonicForex team, and today I want to take you through the box strategy. This is a new concept that we are looking at. In fact, we just introduced this over the last weekend's session that we had for our practical technical analysis class, and it's something that is quite interesting. We were not able to cover off the short part of it, so I thought I'll take this opportunity to go through it. It's a good recap for those of you that attended, and for those of you that are new, it's also something that you could use as a potential strategy moving ahead. So the box strategy involves you drawing boxes around weekly highs and weekly lows. So if you look at my screen, I've been quite diligent in marking out what was the previous week's high and the previous week's low. Now, how do you do this? It's pretty simple. If I'm to go back to a clear template, this is what a chart would look like without any boxes. Now, if you want to draw a weekly high and weekly low, you need to go to the H4 chart, which I've selected here, and you'll see these perforated lines that separate the chart. When I press Ctrl Y, the lines disappear. When I press it again, it'll come up. Now, essentially, here the areas between the lines are considered to be 1 week. So this is last week, okay, and this is how we kind of try to base off our box theory on, which helps us to determine whether we can take a trade at the high or the low of the previous week. Okay, so what I generally do is I would draw out boxes for all of the pairs that I analyze, and that's how, and I've been doing this for quite a while, and I found it that this really helps, and it kind of led to this box theory. So let me rather than going through the notes, let me just really explain how this concept works. Now, what you need to do is to look for the previous week's high. So over the weekend, what I saw was this. This is all that was there to be seen. I look at the highest point and then I look at the corresponding RSI. Okay, RSI is something that is a relative strength index. It shows whether the market has been overbought or oversold. In this particular case, we are looking for the market to be overbought. And what that means is that it needs to be above 70. And don't forget, I'm looking at this on an H4 chart. Okay, everything that we do is on an H4 chart because we are looking at a weekly box. Okay, so first step, make sure that this guy is at a weekly, it's at an overbought area, which is perfect. Okay, then the next thing is that you need to mark this out and wait for this level to get hit again. Now, in this particular case, it just dropped and then it came back up to retest the high of the previous week. Now, if you don't, sometimes it could drop and retest maybe 2 days later. It's good to have this application called Call Alerts, which is something that I've put on my mobile phone, and you can really program alerts, and it'll tell you when it's hit. It'll send you an email, or your phone will just vibrate. So what needs to happen next is that when it comes to this level, so I'm going to analyze this very carefully here. Okay, now let me just confirm that where were we? Okay, so the previous week's high, let me just mark it out with a different color so that you guys can see it very clearly. Okay, so this was the high of last week. Now I need to see a candle come here, touch. It doesn't have to touch, but it needs to be 10 pips away from the high of the previous week. Okay, so in this particular case, we are looking for a reaction where the candle, it can go through like this, come back down and close below. The key thing is where this candle closes. It needs to close either at this orange line or below it. If it just, let's say, breaks through and closes above, there is no trade. You don't think about this, you just move on to the next pair. So this guy gave me an indication that, first of all, this line is being respected. And then the other thing you need to look out for, at this particular line, you need to check out the RSI. And you could see that this RSI is lower than this one. Okay, so in technical terms, this is called divergence. Okay, so there are a couple of criteria here, which is what we've specified in our notes. First of all, you've got to make sure that this candle does not crash through. That means it cannot close above. Okay, the next step is that you have to make sure that the RSI at this point of time is lower than the previous week's RSI. Okay, in this case, it wasn't very obvious, but it was good enough for us to put a trade. Okay, so what do we do next? So you know that you want to sell it somewhere around here. So we sold this at around 75.30, and we did put it out as one of our trade calls. Now, where do you put the stop loss? So the stop loss is a bit interesting because you need to be a bit careful with this guy. At a minimum, you need to look at the daily average, which is 54. Okay, 54, you need to divide it by 3 and add it to this level. And in fact, this candle has already made a high of 75.33. I would add 18 pips on top of that and put it around 75.51, which is pretty high up. In fact, when we released the signal, we put in a much bigger buffer. We put it at 75.70 just to be sure, but your stop loss needs to be somewhere up here. Okay, somewhere around there. So that's pretty good, right? You're shorting it at around 75.30 with about a 51 pip stop loss. Okay, so that's how you would execute the trade. Now the next question is, where is your target? So target is very simply the low of the previous week, 74.14. We're still about 60 pips away. Okay, so we're still monitoring this because it seems like this guy looks like it wants to move above, but this blue line here is a very, very strong resistance. So it's been resisted a couple of times, and hopefully we'll see a nice drop off this. Okay, the other way we are going to monitor this in terms of how to take profit is really to draw a slanting trend line, a 45-degree trend line from the top here, and then we'll just mark it out. That's 315 degrees. So as soon as this line is violated, we will come out of this trade. Okay, so for the moment we are holding this and hoping that this guy would continue to drop at least to the low of last week and maybe beyond that. But that's how we look to analyze this. So during the class we covered off how to do the bullish setup. This is really the bearish setup that we are looking at. So let me just switch over to the PowerPoint and make sure that I've covered everything. So I think here's a good example of something that's in our notes, where we say that the previous weekly high must be overbought. You could see it comes back and tests this level, and you could see that, okay, it needs to make some sort of a rejection bar here. Then you can sell it off the next bar. Stop loss 3, divide the daily average by 3, and then target the low of this, but draw a 45-degree line to make sure that if it breaks, you take the money and run. Okay, so let me just show how this worked out. So you could see that the 45 degrees it's a very important line, because this is what happens to most traders, where if you don't manage your trade properly, a winning trade, this is about 300 over pips. If you don't manage it and you don't have a good exit strategy, you would end up losing. This would have stopped you out, but in the end you could have gotten out with about 130 pips. You would have closed it somewhere up here, but it is still a good trade. It's better than getting stopped out or getting out at break even. Okay, so this is and I've got another example of the Euro Aussie trade. It was a mistake that I made yesterday, but it's going to be a good sharing here. Okay, so let me see if there's anything else. There are a couple of examples here, and yeah, for those of you who have not signed up for the PTA, it's a very good opportunity for you to learn a new strategy. We offer this only at $51, and what happens is that once you open up an account, a trading account with IG, and you place 10 trades, we will rebate you back $150. So essentially you're going to learn a new theory for absolutely free of charge. Okay, so what I'm going to do now, and let me just cover this off in terms of trade failures. So remember, we said we are looking for this candle to come and touch the previous week's high, but if it bashes through, there is no trade, and that's the end of that. Okay, all right, so let me close off my PowerPoint and let's start looking at some charts, and let's do some reflection on some of the trades that we took this week, which I think is a good learning for all of us. Okay, first of all, the Canadian yen pair, which was quite annoying and didn't make us much money, unfortunately. We were looking for bat pattern, and I covered this off last week. So we sold it somewhere around here, very nice at the previous week's high. Fell down very well on, I think it was last Friday night, started coming back up, fell back down. We got out, I think we got out with around 25 pips, which wasn't too great. We could have actually maybe held on much more, but this pair has been very annoying. It's just absolutely doing nothing. So it's something that went sideways for a long time. Even now, I can't really see any trade here, so we're going to leave it as it is. The other one we did was the CAD Swiss, and we're still in this, hoping that it will continue to drop. We took 2 trades on Euro Pound. Now let me go through this, and I think the first trade was something that maybe we shouldn't have done, which was, it was a big pattern to short. Now you could see that Euro Pound is really on an uptrend, okay, and we were trying to short it somewhere up here. Okay, I need to make this line much thinner, otherwise it's going to be very hard to see. We're trying to short it somewhere up here. There was a minor reaction, and then it went up and it stopped us out. So what was wrong with that trade? I feel that we were going against the trend. We should have waited a bit more longer for this candle to form, and once it broke above, we shouldn't have entered it in the first place. So that was a bit of an error. This afternoon we kind of corrected that. What we said was that, okay, let's stick with the trend, and I'll go back to my boxes so that you guys can see this more visually. So what I did was, okay, I drew these boxes. So this was last week, and this was this week's low, somewhere around here. Now whenever we draw harmonic patterns, we always need to make sure that you base it off a previous week's low, or the current week's low. So in this particular case, Terry spotted this pattern, which is a shark pattern, and we are beginning to use this more and more in our trading. We found a perfect confluence at around the key to this is the 1618 level, and it came in at around the 39, but it also needs to confluence with the 886. So in this particular case, the zone to go long was somewhere around here. So we just put a pending order here. It picked us up quite nicely, and it's well, it's gone up. We've already switched this to break even, and our hope is that this guy would continue to move upwards. Okay, so that's our plan for Euro Pound. It's always good to stick with the trend instead of trying to go against it. I think that was one of the lessons that we learned this week. Okay, so this is another trade that I just posted out today. So if you go to my trading view, you should I mean, if you guys are really into trading, do follow us on trading view, because we do put out quite a bit of good ideas here. So this was a trade that I called up about 7 hours ago. So once again, there was a shark pattern here, and I said that okay, we're going to try and sell it at around 85. So let's take a look at this. And why 85? Well, it really goes back to my theory of boxes, because you'd see that I'm always trading off the previous week's high. In this particular case, it was somewhere up here. Okay, and what we are doing is we just draw a shark pattern, and it came quite nicely at around, it came around here, but I don't know, I just saw a very strong upward movement, so I wasn't too keen on entering. I just waited for this candle to form, which showed a nice rejection, and then I went in the next candle. Okay, how am I managing this trade at the moment? You would see that even in my trading view, I drew this line, and in fact someone commented and they were asking me, you know, why do you put this line? How does it help you? So I'll explain it here. What we try to do is that 45-degree line, we draw it from the topmost point, and then if this is violated, you're definitely out of the trade. And one thing we've learned from Scott is also to try and draw an accelerated trend line. An accelerated trend line essentially joins all the tops of the candles. So you can see that there's rejection, 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 and we need to, so maybe I've got two positions in this. If this line is violated, most likely I will take one position out. And if the other line is violated, I'll be out of the trade. Anyway, I've switched this to break even. It's up about maybe 30 pips. It's not too great. So still not really making any movement. I think there's some news around 10:30. But until then, I'm just going to hold on to this, and hopefully we'll see some reaction to the downside. Okay, so that's that's Swiss yen. Okay, and let's see how the 9 o'clock hour closes. I wanted to take you through a trade that I felt I did a bad job at managing the risk, or you know, really not paying attention to the trend line break. Now, yesterday we put out this signal to short Euro Aussie, and it was a very good reaction. So it hit this level, and once again it's a shark pattern. So guys, do read up about the shark pattern, because we're seeing this happen more and more frequently, and it's something that's really good. So let's see what happened here. Whoa, that moved very quickly. So I don't know if I can shrink this up. Yep, I can. Okay, take a look at this. Now, from the time I posted this, it dropped from about, it dropped maybe about 40 pips. Now, if in fact, I was just outside, so I wasn't really monitoring this very closely. So if I was monitoring this, I should have gotten out of the trade once this line broke. But I don't know, when I checked back, it was somewhere up here, and I think some part of my ego kind of played up and said, okay, let's try to hold on, because I saw so much of resistance here, 1 2 3 4, and something said that okay, it's going to come down. But rules are rules, and that's why I'm very adamant that this guy, I'm going to follow my rules today to make sure that if it comes up, I'll take my money and that's it. I'm not going to compromise on this. And you guys have to also practice this. So once this line was broken, I should have gotten out. I should have gotten out at break even, or maybe with 10 pips. I know it's painful, but it's good discipline rather than having this loss. And obviously the most obvious thing is that you need a stop loss here. If you don't have a stop loss, it's going to be flying high and you'll be, I don't know, crying the whole week. So we got out somewhere around here. No, around here. Yep, around 40. But overall, I think this was poor trade management. I'll be upfront saying that. So need to follow the rules and not use any emotions in this. Okay, so I'm happy to analyze any pair that you guys would want to hear about. Any special request, you could just type it in and I'll pick it up. Let me show you one trade that I'm looking out for, which is Euro Swiss. Okay, Euro Swiss is perhaps my most annoying pair because I don't know, I can never seem to get into a trade on this. We were looking to short this last week at around here. It just missed and came back down. But now I'm seeing a very nice bullish bat pattern. So if you look at this, and my boxes helps me to see this. This is a very, very good support, the one with the blue line. And I usually draw the blue lines to mark out the monthly highs and lows. Okay, so if you guys are tender PTA course, you'll be able to understand how these lines are drawn and how it helps you to trade. So given the fact that this is a solid support, I'm looking to buy somewhere around here, and I found a very nice pattern. Let me just change the color so that you guys can see this properly. Okay, there you go. So we're looking for a back pattern that's at around fib 8. So the zone that I'm looking to go long is somewhere around here at around 1.08 even. Stop loss would be about 20 to 30 pips. I would say maybe 30, no, maybe 25 pips, and potentially looking for a ride back up to 1.09. So I would think this is a very good trade. I just feel that sometimes I'm very unlucky with this, so I'm going to set all my alerts and keep a very sharp eye on this. Okay, so that's what I'm looking out for Euro Swiss. I don't seem to have any other trades, but seems like we've been able to put out quite a bit of trades this week. And Sean is asking for Euro USD. Okay, so good point. Euro USD, I was watching when this candle was coming up whether we could potentially short this, but thankfully I didn't get into it. There was no pattern. I was waiting for this candle to form and it just broke above. So at the moment there is no pattern to short this guy other than for a very, very big pattern that seems to be coming up around here, which is sort of a bat pattern. So if I draw this, let me see. Nope, it's not quite aligned. Okay, let me just clear this out first because it's confusing. Okay, do I see anything here? Okay, I see a big sharp pattern coming up somewhere around here. Nope, sorry. Nope, nothing at the moment. Am I missing out something? Give me a minute, please. Okay, this. It's a daily chart, so you've got to be patient with this. Let's see if there's a bat pattern that comes up around. No, it's not aligning up. So at the moment, I don't have anything. I would, though this week, it's very unlikely that I would trade this. But next week, I might look towards the box theory to help me to see if I can short somewhere around up here. So you would see that, all right, there is already a bit of a rejection candle here. If there is divergence somewhere up here, I might be interested. Yeah, I could, in fact, here looks like we might have a bat pattern forming up. Yep, some sort of a cross between, it's still a bat pattern. So this is looking good, Sean, in terms of hope you guys can understand all these lines that I'm drawing. Do draw it a bit quickly, but I'm not used to drawing it slowly. So I see quite a nice pattern here around the 1.1312 area. So I'll be interested. I won't short this week because I need the market to tell me that this level is going to get respected. And how do I know that? When the market says that this is this week's high. Okay, and I'm not finding any good support, or sorry, in any resistance around here. Seems like this is a straight up to 1.14, but next week or this week, let's say this guy, you know, just idles around here and goes up to test this next week, I'll be interested in shorting it. Okay, so that's my plan for Euro USD. Now, that's a good pick because I didn't see this, and I guess I would have seen it next week, but yeah, I usually do my analysis on a Saturday. Okay, any other pairs? We've still got time. Okay, you guys seem to be pretty shy. Let's take a look at what's happening to Swiss yen. So it's still dangling around here, which is a bit annoying. So it's neither up nor down. Maybe we have to wait till about 10:30 when there's some news. It might drop down, it might go up, but I'll be watching it and then deciding whether to stay up or sleep. So this guy, once again, still around here, no clear direction. So we'll continue to hold. And Euro Pound, this is likely to go back and touch our target, which is 0.887. So there might be a shoulders, head, and another shoulder coming up, but I don't know, the way this is going, it seems to be just continuing to go up. Okay, any other pairs you guys want to look at? Pound USD, thank you. Okay, let's see. Pound dollar. Okay, pound dollar has to be a short. I don't see any reason to buy this at this point of time. Okay, so after the Brexit, there was this massive downturn. Seems like it's consolidating here. Let's look at the weekly chart, which looks really ugly, but yeah, to me, see, pound, you can't be buying pound, that's for sure. But I don't see a pattern to do anything here at this point of time. Maybe it goes back to the same theory as the US dollar, Euro USD. If this is established as this week's high, then maybe I can bank against that and short it. In fact, it would make more sense to short the pound than the euro, because the pound is relatively weaker. But for the moment, I simply can't see any pattern to short this. So yep, it's yeah, I'm just trying to see if there's a shark pattern here, but no, I don't think this ratio lines up. Nope, so this is not good. So unfortunately, pound dollar, no opinion at this point of time until next week. Anything else on the chat window? Okay, maybe I'll wait for you guys to throw me some ideas. But while we wait, maybe I can quickly share with you some stuff that we are doing. Okay, Tom, I'll look at dollar yen. Okay, let me switch over to dollar yen. So dollar yen, where are we? I think there is a huge pattern to go long on this, which is something that we observed last week. It seems like, I don't know, just looking at the yen pairs and maybe just thinking about how Japan usually works, they may just jump in and have some intervention sometime soon. So for us, we are preparing to go long on this pair. Now, this is a good box theory where we could, okay, you could see that it went down to 99.40 something. Over here, I'm seeing that, okay, this guy is oversold and it's moving up. If next week it could come back down to test this at around 100, maybe it would be a good opportunity to buy. I do see some sort of a shark pattern here. It's not very clean, but at around 99.60. So still about 100 pips away. But it is, you know, definitely something that I would consider, because it just seems like the yens are consolidating. If you and that's the reason why I'm watching this guy like a hawk, because if you look at the bottom here, you would see that, okay, it's got a one bottom, two bottoms, triple bottom. So it means that this guy is looking to reverse, and that's why I'm watching this like a hawk, because as soon as, you know, the market tells me that this guy is going up, I'm out of this trade. So even in my post, I did say that this was going to be a very quick trade, but if it continues to keep falling down, I'll hold it down as long as possible. Okay, let's see if we have any other pairs. Nope. Okay, so let me let you guys know what we are up to. Of course, please do continue to come back for our live trading. We'll do this, well, at the moment it's every week, so we will try to be here on every Wednesday. Tomorrow we have a session on how we trade using harmonics, and if you like what I've been doing and, you know, trying to find exact turning points in the market, please do you know, join us tomorrow. You need to register so that you'll be able to join us. And if you guys want to hear more about the box theory and you're new to Forex, you want to get a bit of a refresher, do come for this class on the 27th. It's almost I think sold out, but you know, I'm sure we can make some time for you. We'll be doing this in September as well. We still haven't put it up here yet. Okay, let me see. No more questions on the chat window, so which means you guys are happy. I hope you've been trading well this week. And remember, the most important thing is, I think the important lesson I learned was really being disciplined enough to draw these lines and not to follow your emotions, but really trade what you see. I think that's the toughest thing. You know, once in a while you need a good reminder to stick to your rules. All right, so looks like nothing else in the chat window, so we'll wrap up this session and hope it was useful and you've picked up some new stuff. And if you need any help, do drop us a note at support@harmonicforex.com. All right, have a great night. Talk to you soon. Bye-bye.